Now, the upcoming UK Consumer Price Index report, CPI, is set to play a potential pivotal role in shaping market expectations around the Bank of England's monetary policy trajectory. Now, the Bank of England's inflation outlook already is under scrutiny. Services inflation was 5% year on year for November. That is incompatible with the Bank of England's 2% target. The Bank of England has repeatedly flagged the services sector as a major contributor to the stickiness in UK inflation, and wage growth in this sector has remained robust. If you remember all the way back to the start of the Bank of England's hiking cycle, it was wage growth in the service sector, particularly in the services industry in London, that really got the Bank of England's attention. So there is potential for pound weakness here if the UK CPI print surprises to the downside. And just look, here we can use SeasonX's risk event feature to see what maximum moves can be anticipated. Over the last 5 years, over these CPI prints for the day, the most that the pound dollar has fallen has been nearly 2%, you see 1.97% here, just towards the end of 2022. I think it was around December the 14th, if memory serves me correctly. And if you look here, you can see other times when the pound has fallen around 1 percentage point. So that means if we do see a surprise UK CPI miss coming in below markets and analysts' expectations, then it wouldn't be unreasonable to expect the pound dollar to fall around 1%. Now, if you just take a look at the pound this week, there's been a wobble in the UK bond market at the time of making this video, and you can see that wobble in the bond market has been pressuring the pound. There's big support down at this 1.2100 level. That would obviously be a major target for any sellers and a key area to look at. And if we just look from current sort of market prices down to 1%, you can see it's about 1.5 percentage points down to that big support level. So definitely something to be looking at in terms of a big unexpected CPI miss. Could easily see some further pound selling as markets anticipate the Bank of England to be cutting interest rates more quickly than ster markets, which only see 2 interest rate cuts this year, which does seem a little bit fine. So trade risk, the main trade risk here, of course, is that UK surprises the upside, and that could potentially even send the pound higher. Not that it would be necessarily worth chasing from a macro fundamental perspective, but nevertheless, it is a major risk to be aware of. Remember, don't just trade it. SeasonX, sign up here at SeasonX, where you can get literally thousands more seasonal insights that are just waiting to be revealed.